today's session over here. Starting this month, what we're doing is a live coaching call. I'll very quickly update you on some of the potential opportunities in the market first. So what you see on the right, some of these currencies have been tagged orange. Basically, those are the ones that I'm personally looking at. And I think, in the near term, they might present some opportunities over here. So I'll just go through them quickly and then we'll jump into the questions as I mentioned. Over here is pound dollar. So pound dollar, basically what we're waiting for is a decent slow move, right? So again, when we mean slow move, we want the market to come back correctively. It shouldn't just go down like that, right? We want it to take time, and based on a little bit of a time projection over here, this would probably set up by Friday. So not tomorrow, give it all the way until Friday, and then this might come in very nicely with potential NFP as well. Okay, so if this is going to be slow, then NFP news, we can trade it to the upside. So you can utilize a breakout for the pound dollar trade to the upside. The other side of things is the Aussie dollar. So this one here, basically, I'm looking at it from this perspective right now. So if you can get, again, a corrective move, quite the opposite of the pound dollar over here, basically also give it all the way until Friday. And then if NFP, you use it as a catalyst. This one here, we're looking at if the NFP data comes out and the dollar strengthens, we can use a breakout trade technique to enter on this to look for a sell side to at 6560, right? So the idea here is pound dollar, we're looking at selling the dollar. And then Aussie dollar here, we're looking to buy the dollar, right? So depending on post NFP, when the data release, whether the dollar strengthen or weaken. So not that crucial as to trying to find out which direction you should go. But basically, you can utilize this technique here where you have one particular pair looking to buy the dollar and the other pair looking to sell the dollar. And either one of this may get you the trade if, let's say, we get a very, very nice move from NFP. The other one here that you can look out for going into NFP this Friday is the dollar Canadian. So this is quite similar to the Aussie dollar setup, but of course it's the opposite direction in terms of USD, right? This one here, if you can get again by Friday, a move like that, so give you another 2 days, we get a move like that, maybe by Friday, you can look for that sell side here as well. So this one here, quite similar to dollar yen. So you get this by Friday NFP, you can look to trade this down. So I think the dollar pairs quite clear cut. Pound, Aussie, dollar CAD, dollar yen. Wait for the correction. Utilize NFP volatility to trade it. So you use a breakout technique to get involved in it so that in the event when the news comes out and it moves opposite to our direction that we're looking at, then you will not get triggered. You just leave it to run and then Monday we'll analyze it again. Gold actually made a move higher. So this one here, if you're in the buy, you should take some partial profit. Very nicely, just tag that. Any decent correction will give you a buy, right? So this one here, just wanted to update on this. If by maybe Friday or Monday next week, you can see a decent correction, you can continue to look a little bit more for the upside. So gold is definitely a pair to look up for as well. Indices, if you can get this, again, wait until Friday. So when NFP data comes out, if you're more into indices trading, you can definitely look into S&P as well for the potential trade to the downside. So a lot of this, basically, you just wait out until NFP day, look to capitalize on that. Pound yen is another one that you want to pay a little bit of attention. I think we may see a bigger corrective move like that. And you might want to consider taking this short-term sell trade potential. So what we need is a decent correction. So this one might build in maybe all the way until next Monday. So this is a little bit earlier to kind of focus on right now, but I just want to talk about it so that if you are looking at pound yen, you just remember that going forward, maybe late Friday, early Monday next week, you might get a potential to sell this down. So that's on the pound yen. And then last one here is the euro pound. Okay, so euro pound, we get a very, very nice little bounce off the targets of this sell trade. And then right now we're looking at a reversal of potential buy to the upside. But again, this will wait for a decent correction down. So again, likely by Friday or next Monday, if you can get that kind of corrective structure, we'll look for an upside from here on. So these are quick updates on some of those instruments and currency pairs that I'm looking at. And definitely you can keep an eye on that as well. So that's a quick one on some of the market analysis aspect. So for now, I will jump into some of the questions that I've received and we'll talk about it. First question actually we'll be looking into is from Steven. Right. So he sent in 2 PowerPoints. So PowerPoint 1, of course, he sent in very, very early. So the market may have moved and things like that. So he mentioned that we will look at PowerPoint 2 first. And if we have extra time, then we'll look at PowerPoint 1. Okay. So let's go over to the PowerPoint that Steven has sent in. So this is the part where Steven asks, actually on the left is a daily chart, on the right is a 4-hour chart. And of course, daily chart over here, he drew in his expectation and analysis where this is the upside for daily that he expects in terms of tree move 1, 2, 3 here. And then on the 4-hour chart, which is the blue color line, the expectation is a bearish one. So 1, 2, 3. His question is which projection has a higher probability and why? First up over here, my personal philosophy is that we always follow what the lower time frame is telling us. But of course, you don't want to go down to like the minute chart. When I mean lower time frame, I'm referring to your trading time frame. So for me, my trading time frame is a 4-hour chart, which means I look at it mostly. I execute most of the trade on the 4-hour chart. That's what I call a trading time frame. Now, if I'm looking at 4-hour, then the daily becomes my higher time frame. So daily is a higher time frame, 4-hour is my trading time frame. I would always prioritize what I see on a 4-hour chart, which is my trading time frame. Then what is the usage of a daily? The usage of a daily chart is that in the event that, there's certain things that I'm not very clear on a 4-hour, I'm looking for maybe targets, I'm looking at what's developing on a 4-hour in the context of a bigger scale, then that's where I utilize a daily chart. So based on this question here, I wouldn't really tackle the part about like which one has a higher probability. But because of the principle where the lower time frame has always a higher priority for me, because that's where I'm going to execute my trade, I'm going to follow what I see primarily on the 4-hour chart. This also comes from the part where if today the daily were to go up, right? So in this case here, your expectation and projection is the daily chart price were to continue higher. If this were to happen, the 4-hour chart will need to also align with that direction and kind of show you that, yes, price wants to go up. Now, the reason for that is because whatever you see on the daily chart, one day itself is built up from 24 hours, which comes from 6 4-hour candle. So what this means is that before you see an up bullish candle on the daily chart, the 4-hour has already moved at least 3 candles, 4 candles to show you that yes, it's going up before the day ends. So the idea here is lower time frame is what we call the building blocks of a higher time frame. Whatever you see on a higher time frame, it needs to first happen on the lower time frame, and therefore you can actually see that happen. So if today we jump into dollar yen, for example, if we jump over to the dollar yen chart over here, yeah. So let's say right now on the 4-hour chart, naturally, this is the projection that we have, right? I think just now we update that. We're looking at more downside. So from a daily point of view, right, I wouldn't go and look at, would I be expecting this up from here on, okay? But my focus is if I'm looking for a sell, where would it likely go next? Because on the 4-hour chart, it's telling me in the shortest term possible that I'm looking at in the short term, which means my 4-hour perspective, I'm looking at sell. So the daily is more of like, is there anything that doesn't really fully align with it? So if I'm going to sell it, then of course, this becomes a significant level to consider. This becomes a significant level to consider. That's where I look at from a daily point of view. Now, whether is it going to go up from here on, to me at this moment, is not a priority. It's not that important because on the 4-hour chart, it has already told me that there is a high possibility this would go down first, right? Before anything move up. So I would focus on this priority before looking for any upside. So that's how my thought process works. Priority goes to the trading time frame that I'm looking at, and the higher time frame becomes a confirmation, becomes like if I need more information, I need more data points, I'll reference to that. But my primary direction, my decision all goes back to the trading time frame. So this is also applicable to you if let's say you're doing on a 1-hour chart. Your 1 hour becomes your trading time frame, and then maybe the 4-hour becomes your higher time frame. If you're doing short term, like maybe 15 minute, then 15 minute become your trading time frame, and maybe the hourly becomes your higher time frame. So that's the idea behind it. That's all from me for today. So all the best. We'll see you guys next week. Yeah. Bye bye.